Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space, and I'm Manisha Gupta. Well, it has been yet another week which is closing in the positive for the crude oil prices. Even if it is off the highs of the week, the Brent is still 26% and US crude prices are up 32% for this year on the back of OPEC and the allies cut, where we understand that the OPEC output is now at the lowest in 4 years. It also has to do with the US sanctions on Iran and Venezuela, which are going to get stricter. Maybe additional sanctions could be put on, and that has added premium to the prices. Meanwhile, the metal prices continue to hinge on the US and China trade talks and the China stimulus measures, which China has promised will only continue in the month of April. That seems to be adding some premium to prices as well. But joining us now to take this forward on what is the outlook for this month and this quarter, we are joined by a panel of experts. We have Naveen Mathur of Angel Commodities, T. Gnansekar of Comtrends joining in the show. Gentlemen, hi, thank you so much for joining us. Mr. Gnansekar, let me start with you first. And what is your sense on the crude oil prices? I mean, I understand the global markets are up and about. The Indian rupee, in the meanwhile, has been quite volatile. But when you look at the Indian prices, your expectation is that we will build up on the kind of gains that we have seen in crude already in the first quarter?
I think it looks like that, Manisha, because, the positive factors that you just highlighted on the Venezuela sanctions and the OPEC, stocks, it clearly looks like the sentiment is favoring prices continuing to, rise. And, we've also had some issues with Saudi Arabia, which have come up and said that, they're going to threaten US by not pricing crude in dollars. So that's a significant thing that's happening in the oil market. So, these are things which could shake up the market a little bit. And I think this uptrend could sustain and continue going ahead into the next quarter as well. And the effects of the OPEC cuts that have happened is actually going to show up in the next quarter, because the balance sheet adjustments, all that, we could see it playing out in a positive way. But having said all that, I'm still a little skeptical with fundamentals, because, they haven't changed in a major way. The, stocks are at decade highs. So, one has to be very careful, because, though there is potential for prices to go up, you can certainly see some huge profit taking and selling happening in crude. But, in the near term, it certainly looks like the trend is going to continue.
Also, comment on the kind of percentage rise that you're expecting. I know it's too early and the markets are way too uncertain, but if I had to ask you on how much, are you expecting a repeat performance of the crude price rise, or do you think we will yet again see a double-digit gains in this quarter too?
I think we won't see a repeat performance, because, we've seen certain resistances cap the market on the upside. Like I said, there is a lot of oil available. Markets are flushed with oil. So fundamentally, there is no reason for prices to really, take off from here in a big way. Unless you have some geopolitical event that could threaten the market on the upside, or the risk to be on the upside.
Well, yes. Naveen, what is your sense? We do agree on the fact that the crude oil prices are in a good space, and perhaps 70, 75 will see the light of the day in this quarter. How are you looking at the prices moving in the Indian markets? What is your sense?
Absolutely, Manisha. Let me first of all wish all the viewers and your team a very happy Gudi Padwa and the new year to start off with. As far as the crude oil prices goes, Manisha, what Gyan has said is absolutely correct. International markets are hovering around 62, 61, 90 for the WTI, and we are seeing the Brent hovering around 70 and 69 levels. I think the lot of roller coaster ride has been done with in the last couple of months. We have seen the prices touching at around $94 also in October and November months last year. I think that repeat would not be possible for this year. Anyway, year-to-year growth, YTD, is approximately 36% for the WTI. I don't think so that kind of momentum or the bullish run or kind of volatility we're going to see on the upside continuing. But at the same time, $75 for the Brent doesn't look too far. The oil rig count is getting down. Last week itself, we have seen the oil rig count from 824 has come down to approximately 816. Plus the kind of scenario, the fundamental scenario with Venezuela and the OPEC strategy is working favorably, looks like to be in the current market conditions. So I think for Indian markets, the prices which are hovering at around 4,300 levels for the WTI would see around 4,500 to 4,550 levels. And for the international markets, I think $75 would be something to watch out for. Doesn't look like to be much rally after that, but $75 can be for the Brent and around $65 to $66 for the WTI in next, I would say, 1 month or so.
All right. Joining us also on the show is Kunal Shah of Nirmal Bang. Kunal, hi. Good to have you as well. How are you looking at the crude oil prices? Because that is what we are discussing. So while we all agree that there is going to be more upside from here, how much more upside is what really is the question of debate?
Well, yes, like you just heard, I think it is going to go up. But the moment we say it is going to go up because of the supply concerns from Venezuela, Iran and everything, one thing which everyone is forgetting, each and every great G7 nations have done the downward revisions to their GDP estimate. So, for example, Chinese oil demand have gone down by almost 0.6 million barrels per day. So, on one hand, we are talking about the production cuts which is taking place by OPEC nation, but we also have to consider that the demand destruction which is taking place on the ground reality. So, my sense is I think $70 to $73 for the Brent looks very toppish. And even though it can rally from here, the moment it breaks 70, you are going to see some short covering taking place. But if you ask me from the annual point of view, I'm not very bullish on the outlook of oil. And even if it can rally, it did rally in 2018. It tested 85 and then again back to 55. Similar kind of move may take place, but the fundamental doesn't change. So I don't think so it is bullish. Maximum 73. I think it should peak out for the year in 73.
All right, that is a view coming in from our experts on the crude oil prices. 72, 73 on the higher side, 45.50 to 4600 on the Indian markets as well. And while we might see a continued firmness, but a repeat of the previous quarter is definitely out of what we have already seen. That really brings us to the base metal prices then, and this one really hinges on the US and China trade talks. While of course there have been high hopes, but no deal as yet. So Kunal, starting back from you itself, what is your sense? Because the talk on the trade seems really getting stretched now, and we hear all kind of statements from both the sides. The talk have also hit some rocky patches on the way. With the kind of conversation that is coming in right now, how would you want to trade metals?
First of all, I'm of the view that whatever rally we've seen in last 2 months, partly the market has already started to expect that there is going to be some deal. So I'm expecting some positive announcement in next 7-8 days or maybe perhaps 10 days, not even 2-3 weeks. We are going to see a good deal may take place from US and China, and that can trigger some more upside in base metal prices. Apart from that, the Chinese central bankers have taken a lot of measures during last quarter, and going forward that is going to prevent any free fall in their GDP growth rate and even growth rate in manufacturing sector. I think a lot of things have bottomed out from here. It looks ample of liquidity, dovish central bankers and expectation of the positive deal. I think forget about the fundamentals. Market is going to move up. Base metal prices are going to rally going forward. So out of entire base metal complex, there are certain metals which is really looking attractive. One is copper. I think 442, 444 good levels to go long in copper on MCX, and you can expect copper prices to rally almost to the tune of 460 rupees. Same again, nickel looks very attractive. 880, 885 great levels to go long. Stop loss should be placed at 860 and expect prices to move up at test levels of 950 to 970 going forward. And aluminum also looks very attractive at this juncture. 145, 146 good levels to go long. and expect prices to rally to the tune of 152 for the delivery contract.
All right, so bullish on copper, nickel and aluminum going forward. Gnansekar, what is your sense? Because the macro is what we continue to watch, as that, of course, has been driving the sentiment and the monies as well. But when you look at the individual fundamentals, we've seen some of these metals in deficit on LME, if not on on Shanghai. How are you looking at the actual demand-supply picture?
Well, I'll come to that, Manisha, but the way these statements are being made by President Trump makes me personally believe that there is something wrong, because why do you have to keep coming every now and then and keep reinforcing the market? So that puts a bit of a suspicion in my mind that things might not be good, but it's being projected as if a deal is coming through. So one thing I need to be skeptical about is that if a deal doesn't happen and the announcement does come, then I think there's going to be a big run over on the entire base metals complex. But the market has also, the other thing is that the markets have priced in this already. This is stretched so long. So even if a good announcement comes, I'm not too sure how markets will positively react, because it'll be a buy on rumor, sell on news kind of an event. Maybe the long-term effects of it might be positive. On the fundamental side, I think each metal has its own supply-demand fundamentals, and my friend here just told about demand destruction. There's a lot of demand destruction already that has happened, and with Chinese numbers not looking good, I think that's going to be a key thing to look forward to more than the trade talks announcement. So the ones which have good fundamentals, which has legs to go up, is basically copper and zinc, and lead to some extent, and nickel. So these are the four commodities, and we have also seen the way steel has rallied. So the commodities related to steel are certainly going to get legs as well to move up in the near term based on this news. But I'm a little skeptical on how this whole thing will play out post the news. My feeling is post the news, markets can correct to some extent, because it's like a buy on rumor and sell on news kind of a thing. Yeah.
Okay. Naveen, getting you in the conversation as well, what is your best pick in all of these metals? I mean, we've seen both Kunal and Gnansekar go between copper, zinc, nickel and aluminum.
I think, Manisha, the one other point which we need to remember is the kind of the economic scenario. The global economy, be it US or the Eurozone, are going through some tumultuous moments. I think the US is not giving too much of a plus side on the GDP growth. The projections are coming down week after week. At the same time, the Brexit uncertainty still looms large. And with that particular uncertainty, you don't know which way the economy will gonna rest in the European Union, particularly the UK economy. We have seen the zinc, particularly the LME inventory has reached to the lowest level since February 1991, and therefore with that particular lowest inventory levels, I think the zinc looks quite positive. We are seeing the zinc prices at around 227 right now. I think 250, 245 levels would be something a quarter down the line would be a good bet to buy on. So I would prefer zinc, apart from the other base metals pack, which might see a little bit of a rally, but zinc would be something which to look out for, and positive in a quarter to an extent of 250, 260 levels.
All right, so we have the strategies in for the crude and the base metal prices there. We are now talking about the agro commodities outlook for this quarter. Remember, we already have started a year which is an El Nino, and there have been initial first monsoon guidance that has come in from SkyMet, where they already have called it a below normal monsoon. Well, the important to watch is that the last couple of years also have been a below normal monsoon. So with the kind of deficiency that the country is looking at, we did see a knee-jerk reaction on many of these agriculture commodity prices, but that there is more to it. We already have seen increase in MSPs. We have seen direct income supports. It's also in an election year. So there is going to be a tough balance that the government is trying to create between the consumers and the producers there. In the meanwhile, there are a few agriculture commodities which have been on a tear, and cotton clearly has been one of them, very, very volatile. And we have seen there's an expectation that a sixth estimate of cotton crop also may be revised on the lower side. side. Gnanshekhar, what is your sense on cotton? Because we've seen multi-year highs and multi-year lows, and in a year, a 15 to 20% of a range is becoming quite normal. Sometimes that happens within months.
Absolutely. I think especially, when you have a crop season that's just going to start, it's usual. Every year you have the same question being asked, whether the monsoons are going to turn out well or not. And then eventually when the crop does come, you have a record crop. And that's what we've been seeing for the past decade or so. But I think this time around could be a change, because NOAA, which is the main weather body of US, has been putting an El Nino watch list for some time, and they've upgraded to an alert just recently. So there's a 70% possibility that we're going to see an El Nino and drought conditions and all that. So clearly, that along with the trade deal not happening and Chinese exports picking up as far as India is concerned, and the rupee also weakening, all this is clearly a signal that cotton prices are headed much higher in the near term. We're clearly seeing a drop in acreage and the drought conditions to continue having a severe impact on the supply side. Overall bullish scenario clearly for cotton going forward. So it's an ideal time to do some bit of hedging in case one is in the industry, because we are going to see prices shoot up in the near term purely based on the sentiment and weather aberrations. So we see a bullish market for cotton ahead, and consumers are going to find it a bit tough, but then I guess over time they get adjusted to price elasticity.
Well, that one is a clear winner, clearly. But when the weather concerns are being talked about, the other thing that runs up is guar prices, Naveen. And with the crude prices up, weather concerns, are you betting on this one?
Very much, Manisha. We have seen the prices moving up quite a bit over the last couple of days and weeks. I think more to do with the monsoon, and the prediction which has come in yesterday talks about some kind of a bullish trend to continue. I think 4,400 is something where the prices are hovering around 4,400, 4,500 levels where the guar seed is. I think the prices may touch around 4,600 levels on the Indian markets, particularly if we talk about the Indian exchanges and CDX. And similarly for the guar gum too, which is trading at around, I would say, 9,000 or so. The upside can be seen to an extent of approximately 9,200 levels or so. But I'm not too bullish on the gum, but seed definitely looks positive, at least for next couple of days and a week or 10 days from here.
All right, so near term is bullish for the guar seed as well. Another area which has been very volatile, Kunal, and that has been the edible oil space. I mean, we've seen everything actually walk in a different direction, whether it is mustard or soybean or castor for that matter. How have you read the space, and is there a better pick that you're taking out?
First of all, regarding the monsoon, we've seen the forecast indicating that this year is going to be El Nino, but at the same time, the IOD is going to be positive. So I do not think that it's too early to call that the monsoon is going to be bad, and we should not worry about it from this moment onward. So that is one thing. Second thing about the fundamentals of agriculture commodity, definitely very bullish going forward. The moment the Chinese deal takes place with the US, in fact, in that, one thing is very clear, that the US exports to China of agricultural commodity is going to shoot up after that, because that is one area where China also needs US as keenly as the US needs China. So I think this is a proposition where the international edible seeds and oil prices are going to take a major lift. Chinese economy expected to stabilize going forward with the kind of efforts they've taken. So internationally, edible oil seeds and oil complex look bullish. From Indian perspective, if the sowing is less, or if the monsoon is not in line with the expectation, then the drop in yield, what we have been seeing in soybean from last many years, we see a good sowing, and then we see suddenly a drop in yields. So I think it looks bullish to me, but the near month, not the far month. The near month contract can still rally, and I think the broad call as of now for the edible seeds and oil both remains bullish. So soybean 38.50 kind of levels what you can expect going forward.
Gnanshekhar, what is your sense? Because you follow edible oil space quite closely as well. Anything that you are going bullish on with the kind of scenario we're working with?
Yeah, even in edible oils, we have seen prices languishing in these lows for quite some time now. So I think it's preparing itself for a big move higher, simply because of the fact that you have international prices. And if you look at palm, we're getting into a demand season. You have the Ramzan demand coming up, and then Middle East and India will be buying. And China still not sorted out the terms with the US. So you still have the soybean problem, and they would look at alternatives. I believe that could sort of add to the momentum here. So, as far as India is concerned, like I said, like Kunal just mentioned about the weather issues, if they were to happen, I think there's a lot of switching which will happen. First of all, I think this time around there will be movement to cotton, because cotton has fairly performed well last year also.
Okay.
So there'll be some switching also, which might sort of have a positive impact on the edible oil complex. And with the way prices have languished, I think it's the right time for edible oil prices to do well. So I'm seeing that edible oil complex doing extremely well in the coming quarters.
Okay. Kunal, 30 seconds. Anything else that you're picking up in agri-commodities for this quarter?
I think in Pulse's segment, Chana looks very bullish to me. 4450, 4500, good levels to go along. Upside target 4800, 4850 going forward in next 2 months. The crop, we've seen a drop in crop in India, and international prices have been constantly moving up. So I think Chana looks pretty bullish.
All right, so chana to cotton to edible oils to guar. It's a bullish line that we have created for you for this quarter as well. Gentlemen, Kunal, Gnansekhar and Naveen, thank you so much for joining us and helping the viewers make a confirmed choice, informed choice actually, when it comes to commodities for this quarter. With that, it's a wrap on this edition of Commodity Champions. Thank you for watching.